Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX. Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
What's happening, beautiful people? Happy Monday, everyone. In the last few days, we saw Bitcoin creating new highs, pushing all the way up to almost $62,000, followed by a strong correction, and it's currently trading at around $57,000. These great whipsaw movements could mean tremendous profits for some and heavy losses for others. Last week, Bitcoin rallied following the news that Morgan Stanley will soon be launching 3 Bitcoin funds that will allow investors to own Bitcoin. The Federal Reserve contributed to this movement, indicating that it might raise the interest rates as soon as 2022 based on economic indicators. And Visa CEO guys announced that the company is planning to enable the purchase of Bitcoin for its users. What is around the corner for Bitcoin and the entire crypto world? More on this topic in exactly 30 seconds with my very special guest for today, Chris Thomas, Head of Digital Assets at Swissquote Bank. Stay tuned. Right, and ladies, gentlemen, traders, happy Monday once again. As promised, please welcome Chris Thomas, Head of Digital Assets at Swissquote Bank. How are you, Chris? Happy Monday.
Very well, thank you. Hello, Andrew. Good to see you again.
Good to see you again, too, and thank you for accepting the challenge. Great movements since we spoke in the crypto world, Chris, but the message that came from Morgan Stanley last week added even more gas on the fire. 3 crypto funds to be launched within a month: Galaxy Digital Bitcoin Fund LP, Institutional Bitcoin Fund LP, and FS Investment Select Fund. Why this rush, Chris? And why the 3 funds instead of 1?
Yeah, thank you. Pleasure to be on again. And incidentally, just before we get into that, the last time we spoke, we were up at 60K about 3-4 weeks ago. And I said that we'd have quite an aggressive sell-off. We got that down to 41, back up again. I guess another question is, will we do the same again in the next few days? But maybe we'll touch on that a little later. In terms of the Morgan Stanley stuff, and it's great to see yet another bank coming into the space, a tier 1 bank, one of the biggest American banks, so very important. In terms of the strategy, 3 funds instead of 1. In terms of if you split out, 2 of the funds are Galaxy Digital funds. 1 is targeted for high net worth individuals. The other is for institutionals. So the only difference is around the size of assets that the actual investor holds within the Morgan Stanley ecosystem, and hence can therefore start trading. So the institutional investors have to hold more assets, but yet they have cheaper transaction costs because they're expected to trade a lot more in larger size as well. So that's the reason they've tried to balance out the portfolio, create some opportunities for all of their sort of high net worths up into the institutional categories. And they've left out retail because that's a lot more complex. Retail involves thinking more about the regulations, far more infrastructure as well. So the natural play is to get set up for institutional and then build out the retail.
Right. Yes, very correct. They did left out the retail, which is not okay. However, we're going to touch upon that in just a second. In addition to that, Morgan Stanley will set an allocation cap of 2.5% of clients' overall wealth. From what I see in the article, Morgan Stanley seems to be targeting investment towards high net worth investors, just as you mentioned a minute ago. What amounts are we talking about for an investment like this with Morgan Stanley, Chris, from your knowledge?
Yes, so I think that the reality is that even high net worth individuals will probably want to put, anything from $500,000 upwards into these sort of structures. Obviously, institutions will put a lot more into it, and the 2.5% cap they've done for a reason. That's because they do not want crypto to blow up, and then all of their investors come back and put pressure on Morgan Stanley, and they're defending their brand. As much as you should allow your investors to do what they want, you have to also protect your brand as well and just roll it out slowly. But it also means that the investors can say, hey, we could invest 1 or 2% of our portfolio into the Bitcoin and into crypto, much like we've all been speaking about the last 3, 4, 5 months. Much like Michael Saylor talks about for most people, much like what Tesla did, much like what Bitwise Asset Management have been talking about for 2.5 or 3 years and issued some very good reports on. So it makes sense. And just touching on that, why 1, 2, 3, maybe even 5% Bitcoin investment in a global diversified portfolio of non-crypto assets? Why does that make sense? Well, on the analysis, it shows that even if it is 1, 2, 3%, the increase in risk of that global portfolio is actually very, very negligible. Yet you get an increase in Sharpe ratio as well. So actually, it makes entire sense to diversify more into alternative asset space, in particular into Bitcoin and perhaps some of the other cryptocurrencies at the same time.
Yeah, I just wish Jerome Powell would have said something about it during the last week's meeting. Anyway, as we see right now, there's a lot of competition between the big boys, the big players. We see Visa and MasterCard intensifying the competition as well, with Visa CEO announcing big plans for the company in terms of Bitcoin adoption. Through his speech, Jerome Powell failed to make any mention of the giant strides made by Bitcoin and other cryptocurrencies in improving the cross-border payment sector last week, and this stuck with me. However, the themes of the conference and the issues he was ignoring strongly resonate with the core aspects of Bitcoin. The question is, where does this leave the retail traders, Chris? They don't really get a portion of the pie, do they?
So I think there's enough of an opportunity for the retail investors to use, whether it be centralized systems or decentralized exchanges for the time being, to get access to the markets. But a lot of these old-fashioned bankers who don't fully understand or don't think that they've got the regulatory ability to fully control crypto at the moment are working in retail's best interests, as in retail as a whole, not the 5% who genuinely want to trade crypto. Because if people end up gambling money they don't have to lose, and they do lose it, then it puts the retail markets in a difficult situation. And that's ultimately what the ECB and the Fed and so on are trying to do to protect these guys, and not protect the 5% who really know what they're doing or who will use alternative means if crypto was blocked in their jurisdictions.
Right, I'm with you. Well, talking about that, this doesn't mean the retail traders stop trading Bitcoin. Yeah, we see a lot of Forex companies advertising on social media. We see a lot of people still interested in it. So while the Fed and the big boys just deal with the big boys, the retail traders are completely exposed to the volatility of Bitcoin, the high fees of trading Bitcoin, and nonetheless, the scams that also happen in the crypto sphere.
Yeah,
now,
I mean, yeah.
Sorry to
just touching on that. I think there's scams everywhere. Unfortunately, it's easier online now to create scams. And so you're seeing them, not just you're seeing clickbait through emails, for example, as well as perhaps some pyramid scheme type setups with Bitcoin, and that's really sad and that's really unfortunate. And hopefully we can clamp down on these things more as society. But as we become more of a digital economy, these things are part of the progress. But it also means that you're probably also getting less non-digital scams, because fewer people are engaging with tangible money notes in their hands and preferring more digital methods. But the good thing about digital methods, and especially with the blockchain stuff, is there's a track record of every point within the transaction. So things are now starting to become more traceable, and hence every point is becoming auditable, and you can be accountable for your actions a lot easier than passing off some money down the line to other people where it might have nefarious reactions.
Yeah, when I'm going to see a regulation on the table forcing people to do the KYC when dealing with cryptocurrencies, then I'll be on it 100%. Now, let me get technical, if we can get technical. Having a look at the Bitcoin chart on a daily chart. Okay, we're gonna see the Elliott waves. There we go. Yeah, this is the Elliott waves pattern being completed, Chris. Okay, the question is it worth looking at technical analysis when dealing with cryptocurrencies which are decentralized?
Yeah, absolutely. And there's a few. It should be part of your analysis viewpoint. So if we think about cryptocurrencies are trading fairly similarly to to currencies, normal traditional fiat currencies, and they trade very technically. So if you take some technical aspects, much like your Elliott wave, absolutely using support and resistance, perhaps breakouts, and you mix all these things in with where's the US dollar lending rate with Bitcoins. What is really the supply and demand? What's happening underneath? What's the real volume on the day? Are we making higher highs with lower volumes? That can be a negative sign, for example, because then there's not much energy. It's quite a lethargic higher high. You've got to take a global viewpoint of all of this.
Right, I'm with you. But the question is it really working, Chris? Because while on the conventional asset classes, you have central banks, you have authorities which could get involved if the exchange rate gets out of hand. Like, look what happened to the Turkish Lira, this morning and on Friday. Okay, on decentralized assets, a simple tweet from a person, a simple post could completely shift the direction. Yeah. So that's why I'm holding back a bit from heavy technical analysis when it comes to cryptos.
Yes, I mean, let's just look at centralized systems where the central banks and the Federal Reserve and the SEC and so on can manipulate the markets. True. They can put a message in the market and make it move. They can stop the markets if the shares on the New York Stock Exchange drop, 7%, 10%, they'll freeze for 15 minutes to have a timeout. That doesn't happen in crypto. So it's a natural process and it's an evolving process in crypto. So yes, that does mean more volatility. Volatility is more natural when the asset class is a lot smaller and newer and there's less institutional activity. But as we mature, as more and more institutions come into the market, that volatility reduces and we get a more normalized behavior. And that behavior then dulls down and reduces drastically the impact that a tweet from Elon Musk or someone could have on the market.
You've read my mind. Yeah, talking about market manipulation, my next question would have been, how do you call the message that came from Elon Musk, and not once, but twice?
The NFTs or the Dogecoin or the Bitcoin ones?
The Bitcoin one, the Tesla one and the Bitcoin one. Because as soon as that went on the social media, we saw what happened with the price. And
yeah,
is also critical to GameStop. Remember GameStop a month ago, Elon Musk 2 weeks ago, very, very similar situation. So that's the proof, at least from my point of view, that the market manipulation exists on the conventional asset classes as well as on the decentralized ones.
Yeah, I mean, that's a fair point. And I think that in due course, the SEC might well investigate Elon Musk as to, why he did such a thing. And should he be a bit more sensible? Because clearly, the guy's an absolute genius, but just occasionally he does some very strange things. And that is, it's fine if you're the right way around. But in the instance of Elon Musk tweeting, I think we were about 45,000 in Bitcoin at the time, and we shot up way over 50 to about 55,000. The reason we also did that was because there was a lot of short sellers, leveraged short sellers, who then got stopped out. They had to buy back their positions as the market moved higher. So that also helped us. Now, if he did the same thing again, we would not see the same impact, because that kind of event has occurred. And anyone, he's one of the biggest people who could make that sort of tweet. So if anyone else half or three quarters the size or the impact of him tried to do something, it would just make a little blip. So that's why we maybe saw the tail end of last week with Morgan Stanley coming out and making that announcement. 2 years ago, that would have probably moved us 5-10%. It hasn't. It just gives us a bit more support to the upside. And so the markets are constantly changing and looking for the next thing that's going to cause that big spike. And who knows what that will be.
Yeah, Elon Musk's latest tweets about Tesla, they remind me very much of Donald Trump. Donald Trump was my best trading partner for a couple of years. I was dying for his tweets. Now, let's move on. What are the cryptos are hot right now, Chris? Do you have anything that's worth looking at, just in case we don't have 60,000 to invest in Bitcoin?
Absolutely. So touching on Bitcoin first, you don't need 60,000 to invest. Even $100 to invest, or £100 or euros, wherever you might be in the world. Try and put it away on a regular basis. Or you can just come in and go, hey, here's 60,000, buy one Bitcoin, see what happens to it, or trade it, which can be a bit challenging. But in terms of more interesting things, where there might be a bit more volatility, where you may see a bit more upside, if indeed we continue on that bull run, I would first start off talking about Luna. Very simply, it's a payments coin. It has real use case. It's in South Korea. It's done about 2 million payment transactions so far. It's increasing quite significantly over the last 4 or 5 weeks, and it's probably got momentum to keep moving to, who knows if it will double or triple over the next, couple of months. I'm not here to really say that, but it's certainly one where there's a real project. It's got real legs. It's moving forward very strongly all the time. So there's opportunity to perhaps jump on the back of that momentum. In terms of a couple of other coins, we saw last week on Thursday that Cardano got released onto Coinbase. That sent the ADA token up from about 104 to 124, 125, 20% increase, then kind of floated about for a few days and shot up again. And it's came back down to about 120, 123, something like that. I think it's probably trading around just now. It's very much academic still, so it doesn't have, all of these projects. Yes, about 100 projects have said we'll move from Ethereum over onto the ADA Cardano ecosystem and start, building on that. That'll be fantastic if it works. There's still no guarantee yet as to what it, if it will work. But obviously, there's a decent probability. Let's just say it does work really well. That could take a substantial amount of traffic off Ethereum. So if we look at that, then the relative play of the size of Ethereum relative to the size of ADA, Cardano, there would probably be a squeeze. So even if they both go up, Cardano will likely perform better and catch up with Ethereum. So that's one that I'm certainly watching. And then just another one quickly in terms of Polkadot has gone from about a market cap of 4 billion in mid-December up to close to 40 billion today. It's bombed incredibly because of the DeFi play, similar to Cardano, a little bit further forward in terms of development stage, but it's ready to really host the DeFi ecosystem. And if that works again, that's going to go even further. And it's already performed 10x. That's a lot, just in 3.5, 4 months. But if you think about where's the opportunity in that, the opportunity is in their test net. It's about $4 billion just now, so 1/10 the size of the actual main net. However, it's probably going to start squeezing up towards, it's probably not going to get to the 40, but hey, it may well get to 10, 15, 20 in the next 3 to 6 months. So that could be quite an interesting one. That's Kusama, the Polkadot testnet.
Right. Okay. So we have Lunar, we have Polkadot, and we have
Kusama.
Yes. Okay. Now, question. And this is a question that I get almost every day regarding cryptocurrencies. Let's say an average person wants to create a crypto portfolio. Yeah, and forget about it for 1, 2, 3 years. What amount are we looking at roughly? And which are the coins? I mean, okay, these 3 coins and the Bitcoin. Okay, is this enough to create a crypto portfolio, Chris?
Yeah. I mean, it depends how big a portfolio the person wants to do. And the question is, what sort of risk? Do you just want to buy Bitcoin, Ethereum, and have certainty that these will continue on, and whether they're going to be 2, 3, 5x or even half in 2 or 3 years' time? That would work equally as well. Or you can go out the curve and start picking up Luna and ADA and Kusama and put them away in your back pocket for that period of time. Or, as I much prefer to do, just keep buying on a monthly basis. Buy a selection every month of good quality coins. These good quality ones are not going to do 10, 20, 50x in 2 months, which some ridiculous coins do. But they're going to consistently, with a fair amount of certainty, they're going to consistently grow. And I'm comfortable holding those because I'm seeing these projects day in, day out, and I can understand what ones will be super interesting for myself and perhaps for other people as well. But it all depends on the risk tolerance.
And I agree with you 100%. There's only one thing I want to mention, because you brought it up this time and you brought it up last time, and many people do bring it up. Investing $100 in Bitcoin. What's the point? How much money are you going to make or lose? If your only goal is to make money, is it really worth investing $100 in the most riskier asset out there that has the lowest leverage, when the same $100 invested in, let's say, currency pairs gets you a leverage of 1 to 30, okay, instead of 1 to 2 or 1 to 3 or 1 to 5, and you could make a bit more profits with that $100. So I personally don't agree with investing $100 in Bitcoin, only because its value is so high right now. $100 will not make any difference. However, I do support investing $100 in the cheaper coins, as you mentioned earlier on. Yeah, Cardano, yeah, and the other ones, Stellar, Lunar, yeah, and the other ones. So this is my view on it. No hate, please. Now, is it wise to have only a crypto portfolio, Chris, or it would be nice to hedge it with conventional assets too?
I'm well away from conventional assets these days. But as I say, I'm in this ecosystem day in, day out. I'm comfortable forgetting about. I watch stocks as the up-down indicator because there's a lot more correlation between equities and Bitcoin or crypto assets these days. So you have to think about what's happening with them, what's happening with QE. Is that going to be something that will also tip over the Bitcoin or the crypto asset prices as well? But in terms of where my risk tolerance is, I'm 100% into crypto. Now that's because I'm comfortable with it. I know I have my commitments, and then everything above that I'm happy to invest, because I look at everything as opportunity cost. And whilst I would love to have a nice car, I'd rather at the moment invest that money into crypto assets, because that's an opportunity cost. I don't really need a nice car just now. I can get a nice car at some point in the future, but that nice car can be bought with far fewer cryptocurrencies in the future as well. So I look at everything like that. And, that's just my extreme view. Everyone else, 99.9% of people have a view which is far more, risk averse and understandable. So, but I think people have got to be realistic and wake up to this and say, you've got to start playing in it. And whether that means 5 or 10 or 20% of your portfolio, you should start playing in it and playing in it in a safe manner. So Bitcoin, Ethereum, perhaps a few of these others in smaller size, and then looking out and actually using that as a learning experience. Because the more you learn, and this is ecosystem 1.0 or 2.0, wherever we want to decide, we are going through several iterations in the next 5 years. So your learning today can get you into the early stages of the next thing. And we see, NFTs have been brewing for the last 6 months. If you were really following this space, you wouldn't realize that, and you can invest in NFTs and get that 20, 30 times increase over the 6 months afterwards. So there's lots of opportunities if you really want to dig in and learn. But yeah, ultimately, people should be involved to some extent.
But this shows you're a professional, Chris. Not everyone has your knowledge. Not everyone can follow all these assets. Now, quick one, just a quick touch up so everyone understands what an NFT is. Can you please explain in a few?
Absolutely. NFT, non-fungible token. These are the things that have been super hot recently. We saw Boodle's 5,000 days selling for $69 million through Christie's auction house. NFT is simply the digital rights of a digital asset. So you saw Elon Musk, Jack Dorsey, Twitter founder, trying to sell off his tweet. I think that closed yesterday for about $2.5 million. So, wow. And lots of different sports. There's lots of American footballers are currently one of the hot things. The NFL superstars, or I can't remember what it's called. They're one of the hot things over in the US. So there's lots of opportunities. But again, this is like experimental. This is really bubble-like at the moment. Take the concept of digital rights back. Where did it all start? Well, Napster started stealing video rights or music rights. And whilst that was wrong, that was a kind of innovation. And then 5-10 years later, things like Spotify emerge. Yeah. And so where is the sort of this digital, NFT space going? The digital rights of, it makes sense, but it doesn't make sense. Well, where's it going to be in 6, 12, 18 months? It's going to be so real, but probably in a slightly different shape. And at that point, that's when the early majority will start coming in as well. But yeah, we're absolutely in a bubble just now with NFTs. We'll probably see a crash at some point, perhaps very soon. I hope it doesn't pull down the crypto industry as a whole, but it might well lead us into some sort of correction.
Right. Thank you for that. One last question, Chris. Is it still plausible? Do you still see an aggressive pullback, an aggressive correction in Bitcoin?
So as we said, literally a day and a half after the last recording, we fell from 60,000 down to 41. And we're at about 58 today. I sold just above 59 over the weekend. Not a lot, but I did take a little bit off. And the reason I did was because we've been up here several times in the last sort of 3 weeks, plus actually that 60,000 for the first time. And I don't feel the energy. I don't feel the institutional energy. We're being held up, in my opinion, mainly by new retail entrants. And so I think we'll probably make some sort of retracement, whether we come back down to around 50, perhaps that could be reasonable. If we come back down to 40, we'll see plenty of institutional support around that level. But one thing's for sure, we're not going to hang around 60 for very long. I think there'll probably be some more interesting news, some new different news that comes out that gives us a kick one way or another.
Could we see Bitcoin topping up 100,000 per coin this year, Chris?
Absolutely, yes. But we could also see it being down at 40 again. So is this the important thing is to observe it and to be able to be fluid in your approach. So have the firepower that if it's down at 40, you can buy in. If it's up at 100, then you take some profits.
Yeah, buy the dip is always good. Right, Chris, thank you ever so much for the valuable lesson today. I'm looking forward to the next one, and let's see where Bitcoin will be then. Thank you once again for making the time to come to us today.
You're welcome. See
All
you
the best.
again. Cheers.
Bye-bye. Right, ladies, gentlemen, traders, we had Chris Thomas, head of digital assets, with us from Switzerland. Now, don't go anywhere. We're coming back after 30 seconds with Neil Wilson, chief market analyst at markets.com. From the heart of London. Let's open the week together. Stay tuned. We're coming back live in exactly 30 seconds with Neil Wilson.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, ladies, gentlemen, traders, happy Monday once again. And we have Neil Wilson in the studio. How are you, Neil? Wow,
Hi.
looking fresh today. Did you get a haircut?
No, still.
Not yet.
Not yet, no. Hairdressers probably reopen in about 3 weeks or something, I think, yeah. So hopefully by then.
I don't know if it's the lighting today or something, but you look fabulous. You look like a Hollywood star. Anyway. Now, I saw earlier on the news, Neil, I'm going to jump straight into it. I saw on the news earlier some clashes in London between protesters and the police forces. What is the situation now? Do you have any intel on that?
Yeah, I mean, there's sort of been some protests about anti-lockdown protests in London, and then there was some fighting, a kill the bill protest in Bristol last night, I think, where some violence erupted. But yeah, I mean, it's nothing to worry about. It's the usual bit of protest, bit of ruckus among some of the harder elements in the crowd, and then we all go home afterwards. So I don't think it's anything to really be worried about from a market point of view.
Right. Neil, big scandal is about to erupt between European Union and the United Kingdom on the AstraZeneca vaccine. Last week, AstraZeneca was cleared again as being safe to use. And now we see another issue rising between UK and the European Union. Considering UK is currently vaccinating nearly 44 vaccines for every 100 people, whereas the European Union had administered only 13 shots per 100 people, according to public data. Do you see the Europe's decision as justified to look towards banning the export of AstraZeneca vaccine?
Well, no. I mean, I would suggest that there's better ways to do it than that. I think. I mean, really, it's pretty nationalistic. It's pretty uncooperative and really a bit insulting from the EU point of view. Really, I mean,
It is.
They've been casting doubt over AstraZeneca vaccine all these months, and now at the same time they're throwing the toys out the pram when it comes to delivery. And I just think the contracts are there. Enforce the contracts as they stand, whether that's to export or not, whatever. Just there's contracts in place. For the EU to be banning them is ridiculous, and it's a pretty aggressive move to specifically ban exports to the UK. I think it's a very aggressive move on their part.
Yeah, everyone is blaming AstraZeneca because UK said it's not our fault. Europe said it's not our fault that AstraZeneca is over-promising more than they can deliver. The question is, what are the potential outcomes from this argument between UK and the EU? And how is this impacting the population ultimately? Because it all comes down to the population. I couldn't care less about politics in a situation like this.
Yeah, I mean, I guess it could lead to some kind of tit for tat kind of, fight between Britain and the EU, which is not really what we need right now in terms of still negotiating a lot of the Brexit aftermath, especially around financial services. So I think, there's the problem there. There's also, I believe, the lipid covering for I think it's the Moderna vaccine is actually manufactured in the north of England. So, Britain could turn around and say, well, we're not going to we're going to ban exports of that. So it becomes a real, it's not good for anyone then. So I think I think hopefully today's news from America with the about the Astra vaccine at least means that the Europeans are going to start taking it. But there's also a YouGov poll out today that shows that I think less than half of, well, put it another way, more than half of people in Spain, France, Italy, and Germany have serious doubts about the Astra vaccine. So, there's still a long way to go there, but hopefully, we need, at the end of the day, we need everyone vaccinated, whether they're in France or the UK or Cyprus.
Or whether it's Pfizer, Moderna, or AstraZeneca, or the Russian Sputnik, or whatever, as long as they're safe and we are vaccinated.
Well, I won't be sure about the Russian one.
But listen, what's the worst thing that can happen? You can speak Russian. Okay, all of a sudden you wake up speaking Russian, so it's fine. I'm up for that. Now, the question: can I ask you one more question about the topic about the AstraZeneca, UK, and the EU? How come the 26 European bloc is failing miserably, Neil, on fulfilling this mass vaccination? Shouldn't Europe be stronger, than anyone else now?
Yeah, I think at the time last year when the time it appeared that there might be vaccines coming, the UK just went straight in and bought and placed orders in pretty indiscriminately, and at quite a high cost. The EU went about it differently and decided that to try and get best price, and so they took 3 months longer to secure the deals, because they went about it the way you'd go about a normal contract, where you'd be purchasing piping for a new a new infrastructure project or whatever. They went about it like that. They didn't see it as an emergency in the way that the UK did, and that's maybe because the UK was really doing quite badly in terms of cases and deaths, and there was a lot of pressure on the British government to do something. So I think that's basically where it comes down to. They were just slower to get their orders in, and therefore they've got a better price, but they're reaping the problems associated with that approach now.
True, and if you think about it, if you come to think about it, I don't know if you remember the first wave and when Boris Johnson was so permissive and no lockdowns happened as they were happening in Europe. However, UK seems to be on top of the situation no matter what, and UK seems to be losing ground now. It's sad what's going on. But anyway, let's move on. Let's talk about the other hot thing that happened, the Turkish Lira, Neil. Turkish Lira dropped once again 15%. Look at the chart. Unbelievable. $7.8560 for the Turkish Lira on TradingView. Look at this amazing gap. Now, the Turkish Lira tanked 15% in the early trading hours. Are you surprised by Erdogan's actions, Neil, of sacking the head of the central bank?
No, I mean, I'm not surprised by them, but I think we'd sort of thought that we were beyond this. When this central bank chief who's just been sacked, when he came in, it was a positive move, and we thought Turkey was moving in that a better direction, as it were, more to supply more confidence to assets, to the market, to the lira. And they raised rates quite considerably. I think 675 basis points last year, 2%, so 200 basis points this year, or last week even, was that hike came. So maybe that hike was just something that Erdogan didn't want and has decided to take matters into his own hands. I think there's elections this year as well, so that might have something to do with it. But yeah, I mean, it's just a sign really that you've got a dictatorship really, where even economic policy and monetary policy gets dictated by the man in charge, not by the correct institution. So a lot of people are really worried about what this means for Turkish assets going forward, and I've seen a couple of notes suggesting that there could be long-term bets on Turkey should maybe be scaled back.
Right. This would have been my next question. So now, looking at the charts, what should we expect from it? Yeah, closing the gap, or it might continue. The tumbling of the Turkish lira might continue.
I think it could continue. I think you could be up to about 9.7 this year. That was a call that I saw today, and I think I'd probably agree with that. 9.7 maybe by the end of the year. So it depends really what the new central bank chief does. But party loyalist, Erdogan loyalist, probably going to be looking to loosen policy, and that'll just let inflation run away. So I think you could see more Lira weakness coming through.
Right. Okay. Now, again, I'm going to jump from this topic to another topic. Big day in the economic calendar, Tuesday and Wednesday, with Jerome Powell testifying in front of the Financial Services Committee tomorrow and in front of the Banking Committee on Wednesday. What are the investors waiting to hear, Neil? What hasn't been said?
Well, after the FOMC last week, and I don't think there's much. I think really they'll be looking to see whether you'd expect Lael Brainard and Richard Clarida this week to really reiterate just how they need to achieve their goal on employment before they'll tighten monetary policy. And I think you'd expect Powell and Yellen to sort of suggest a similar kind of attitude and really signal that they're that they're happy with the current monetary policy accommodation that they've got. I guess there'll be maybe some questions about whether they should be thinking about tapering asset purchases this year. I think the market thinks they should be. Markets, of course, pricing in a hike to interest rates next year. And I think the market's going to maybe just move a little bit higher. I think you could see bond yields start to creep higher again. I think you're looking at 2% on the US 10-year this year, definitely. It just depends how quickly that move goes. If it just drifts higher throughout the year, it's not really a problem from the market. But if you get these big jumps, then you get the heavy selling in some of the growth stocks. And
what could cause those big jumps? Where could that come from?
Well, you could say, any sort of commentary really around from the Fed really would be a big one. Inflation prints. I think the risk now coming into the spring is with the base effects of last year combined with higher oil prices, combined with all this pent up demand coming through, you get a big pop in inflation, and some of these inflation readings could be pretty mighty over the next few months, and there'll be pressure then in the market. The bond market will probably start to react to that. And there'll be pressure to a degree on the Fed to catch up, but I don't think the Fed wants to catch up. And so the more the Fed leans against catching up, the more the bond market will reflect the opposite, really.
Yeah, the bond market and the yields created quite a bit of a mess in the recent couple of weeks, even including the cryptocurrencies as well. Now, quick question, Neil. What would you say is the hottest asset to look at, or the hottest two assets to look at this week?
Well, good question. Well, the Lira is going to be interesting if you can find somewhere to trade it. Lira is always interesting when it starts moving around like this, but we've seen it before. So yeah, the Lira is going to be good to watch. I think also, you've seen gold kind of chop sideways for a while now. I feel like it needs to make a break. We've had some positive signals on that MACD bullish crossover. I think you start to test the top of the channel, sort of around say 1760. So I think I'll be looking to see whether or not the gold starts to move off the back of any commentary from the Fed this week. What else is out there? Can't think. Oil's always good to watch because I think you've got a real worry about the fact of the summer season in Europe maybe not really happening. Driving season, exactly. Holiday season. The technical setup there is, nice for another leg lower, I think.
Yep.
So there's a few things to watch out for.
Right. So gold will be dependent, probably 99% on the meeting that happens tomorrow on Wednesday with Jerome Powell and Janet Yellen. So probably on then we're going to get a bit of a hint. On oil, we're going to get a hint on Tuesday at the API, or on Wednesday, you think, when the crude oil inventories come out?
Yeah, always the Wednesday one, really, for me. That one, the API one's always not really the main event.
All right, and the euro, yeah, because we have to see how Europe will try and sweeten up, yeah, the deal with UK. I'm really against what Europe is trying to do. But this is my humble opinion. I think we should all focus on the population getting vaccinated faster, opening the holiday makers' way to travel, as some countries are 100% dependent on tourism. Right. Neil, thank you ever so much for being with us today. I wish you a lovely, lovely week, and I'll talk to you again towards the end of the week.
Cheers, Andrew. Thanks.
Right. All the best. Right. Ladies, gentlemen, traders, don't go anywhere. We're coming back live in 20 seconds with the U.S. markets open, which already happened quite a few minutes ago. So let's see the conditions of the market on this beautiful Monday, 22nd of March, 2021. Stay tuned. We're coming back live in 30 seconds.
Keep your finger on the market pulse with the News Alerts tool. Stay up to date on the latest sentiment across all the major asset classes. Uncover bullish or bearish signals tied to specific assets that could be developing before major price moves, and track how news sentiment correlated with price in the past. Track the news volume on an asset, its fear index, and get a better feel for its underlying strength. All with News Alerts, your central hub for market information. That's higher trading from MarketsX.
Right. Good morning, America. Good afternoon, Europe, and welcome everyone to our live stream. Happy Monday, people, and happy Human Rights Day for all our friends in South Africa. How are you guys? Now, let us know how you're doing. Let us know what you think about the broadcast, guys. If you like what you see, like, share, subscribe, and support us in delivering more great content. If you don't like what you see, at least share our broadcast so we can annoy more people. Now, let's see what's happening in the markets on this beautiful Monday, March 22nd, 2021. The US indices were pointing to a missed opening today, looking for a catalyst to correct after last week's drop. But with Jerome Powell and Janet Yellen testifying this week in front of the Financial Services Committee tomorrow and in front of the Banking Committee on Wednesday, investors will keep their fingers on the trigger waiting for news coming from the two meetings. As AstraZeneca gets another clearance, the UK and the European Union seem to be at a T-junction, with the European Union looking to potentially ban vaccine exports to the UK. As of March 20th, the UK had administered nearly 44 vaccines for every 100 people, whereas the European Union had administered only 13 shots per day per 100 people, according to public data. A new spike in COVID cases in the recent week caused clashes with the security forces in many European countries, and Germany is set to join France in extending lockdown measures until mid-April. In other news, the Turkish Lira fell 15% today, near its all-time low after the Turkish president dismissed the central bank chief. The dismissal of Nasi Akbal reaffirmed the political control that has for years harmed foreign investors' view of what is major emerging economy. Crude oil recovered some of the losses suffered on Friday, but it's still trading shy of the $62 mark, pointing more to the downside than to the upside. And Bitcoin, everyone's favorite, keeps steady just below the 60,000 mark after the Visa CEO announced that the company will allow its users to purchase the famous cryptocurrencies. U.S. markets open, coming up. Right, beautiful people, headlines of the day. As vaccine battle with UK deepens, EU blames AstraZeneca. It's very, very important to go through this article, guys, and see what is happening with the health of our loved ones from Europe, and what is happening with the health of our loved ones from the United Kingdom. So, Britain yesterday demanded that the European Union allow the delivery of COVID-19 vaccines it has ordered, as tensions over a possible ban on EU manufactured shots mounted. But Brussels say drug maker AstraZeneca was to blame. The UK is not to blame. The Europe is not to blame, said an EU official. It's about everyone finding agreement with a company that has been overselling its production capacity. AstraZeneca has to deliver doses to its EU customers. Of course, you can say that when in Europe, we're getting almost 13 people vaccinated, 13 vaccines per 100 people, while in the UK, almost 50%, guys, 44% of the people supposedly got vaccinated. After falling far behind the post-Brexit Britain and the United States in rolling out vaccines, the EU leaders are due to discuss imposing a ban on vaccine exports to Britain at a summit on Thursday. British Prime Minister Boris Johnson is expected to speak at the EU most powerful leaders, German Chancellor Angela Merkel and French President Emmanuel Macron, in a bid to get the bloc to steer away from bans. There will continue to be some robust conversations with the European Union about the importance of no such blockings happening. Helen Watley, a junior health minister, told the LBC radio, it's really important that companies are able to fulfill their contractual obligations. Great Britain, which exited the European bloc on December 31st, has repeatedly cautioned that the European Union is breaking a contract law that have gave consequences, but has not yet specified what those consequences would be. AstraZeneca has told Brussels that the United Kingdom is using a clause in its supply contract that prevents exports of its vaccines until the British maker is fully served, EU officials said. While France, Germany, and Italy broadly support tighter export curbs on those who do not think the same, countries including Netherlands, Belgium, and Ireland are more cautious about cutting off the UK. The European Union has so far blocked one shipment of vaccines to Australia. Okay, this is a big news, guys. This is a big news. Let's see what's happening and why Europe is failing miserably of fulfilling its duty to the citizens of Europe in vaccinating everyone against this COVID-19 vaccine. Now, moving on to another hot news. Turkish Lira plunges to near record low after President Erdogan sacks central bank chief. Right, this can only happen in Turkey, probably Russia, China, and a few more, North Korea, and a few more countries. Turkey's lira briefly fell 15% to near its all-time low on Monday after President Tayyip Erdogan's shock weekend ousting of a hawkish central bank governors sparked fears of a reversal in recent rate hikes. Right, okay, so this is the news. I'm not going to bore you to death with it. We're going to look quickly at top 5 things to know in the markets today, guys, and then we're going to move into to looking at the charts of the day and the signals of the day. So, number one on the board, U.S. trial results vindicate AstraZeneca as European vaccine dispute deepens. We spoke about it for half an hour or so. I'm not going to go into it. Third time lucky for CPR. Canadian Pacific finally succeeded in persuading a U.S. railroad operator to merge with it and create the first railroad operator to link all three major markets in North America. Okay, big news for stock traders. Number 3 on the board, stocks set to open mostly lower and GameStop earnings eyed. The bad news on the COVID-19 front has given an extra leg to the rebound in tech stocks as and the setback to cyclicals as markets around the world repriced their reopening bets. Yields on 10-year U.S. Treasuries, meanwhile, fell back to 168% by 6:10 a.m. Eastern Time. Dow Jones was underperforming in pre-market trade, falling 88 points or 0.3%. The S&P 500 was down 0.1%, and the NASDAQ 100 was down 0.5%. Pre-markets open today. Stocks to be in focus later include GameStop, which is due to report earnings for the 3 months through January, the first update since the epic short squeeze earlier this year. The analysts expect a profit of $88 million or $1.35 a share on $2.2 billion in revenue. Also in focus will be Tesla, guys. Very, very important. Whose biggest fund manager cheerleader, Cathie Wood, put out a new target price of $3,000 by 2025 at the weekend. Existing home sales data for February are also due, with the Federal Reserve, Randy Kroll's, Mary Daly, and Michelle Brownman all speaking later. Number 4, Turkey in turmoil. We spoke about it. And number 5, guys, the last but not the least, Aramco defense dividend at a price. Saudi Aramco, the world's biggest oil company, said it would keep its dividend payment at $75 billion for 2020, despite a sharp drop in profits due to the pandemic. The decision says less about the outlook for the global oil industry than it does for the Saudi budget, which relies on Aramco's dividend for most of its resources. Free cash flow fell to $49 billion, meaning that the company will have to borrow to cover the shortfall. I'm sure they're going to manage, guys. I'm sure they're going to manage. We're talking about Saudi Arabia, so I'm sure they're going to manage. Now, let's have a quick look at the charts and see how the markets open today, Monday, 22nd of March, 2021. Who's up for it? All right. Now, Crude oil WTI on a 60-minute chart, guys, 61.58 with the RSI and the stochastic pointing upwards, but still shy of performing. We are already almost half an hour into the U.S. trading session. I was expecting a bit more from the markets today, but the volume seemed to be quite low. Moving on, we're looking at Euro USD, which had a very good rally on the markets today on the European trading session, encountering some resistance around that 119.29 level where the 200 moving average is. And as we see right now, the price got a rejection from that 200 moving average, 119.21, with the RSI stochastic turning around, pointing downwards. The downtrend in euro, guys, might continue as Europe cannot manage to fulfill its obligations to the population and get the population vaccinated. Now we're looking at the pound, guys, 138.26 for the pound, and dropping after it traded higher on the European trading session. It encountered again some resistance by the 50 MA at 138.75. Okay, very important support level where we are right now. RSI stochastic both pointing downwards. We might see a sharp drop, guys, later on today, as the pound has been pushing higher for quite a few weeks now. It might be the time for a bit of a turnaround in the cable. USD JPY, on the other hand, 108.78 for the USD JPY pair. Very choppy trading session. However, we seem to see a dead cross to be formed between the 50 and the 200 MAs, guys. And we also see the US dollar creating lower lows and lower highs for the last few trading sessions. Once again, let's not forget the tremendous uptrend that the US dollar had for a couple of weeks. What do you think? That's going to last forever? Unlikely. So you might want to get ready for a potential weakness in the US dollar versus the Japanese yen, guys, as the markets will probably try and correct. The RSI did not manage to meet the overbought levels for quite some time now. We see a bit of discrepancy between the RSI and the stochastic at the bottom of the chart. There is more potential to the downside than to the upside as things stand right now. AUD USD, on the other hand, very choppy trading session. Again, just like the euro, it found some resistance at 0.7749. The price got rejected and is currently trading at 0.7739 with the RSI stochastic both pointing downwards, indicating a bit of weakness in the markets. Moving on, we're looking at USD Cad, guys. Again, on a 60-minute chart, the 200 moving average plays an important role up there. RSI stochastic, nothing is really happening as we speak. 125.03 this afternoon for the USD Cad. Let's see what's going to happen. And now we're looking at the S&P 500, guys. Let's have a quick look at the open. Okay, we see an opening, a positive opening today. Okay, where are we? There we are. Okay, positive opening today. A bit of resistance there by the 50 and the 200 moving average on a 15-minute chart. But the RSI and the stochastic are pointing upwards, and they're giving us a bit of hope for a market's correction. Yeah, the same markets that tumbled for 3 trading sessions in a row. Luckily, we have that 200 moving average to sustain the price from falling even further. In the same time, we're looking at the Dow Jones Industrial Average. We see a negative opening for the Dow Jones that recovered shortly after the U.S. markets open. 32,663.48 for the Dow Jones. RSI stochastic pointing upwards. Let's see. Good. It might be a good day for the tech stocks. Now, quick look at the US dollar index, guys, which bounced from the 200 MA, 91.91 as we speak. There is great potential to the upside as the RSI did not manage to meet the oversold levels for quite some time, and the stochastic is still pointing upwards. Gold futures in the same time, 17.32.10, and dropping as we speak. A lot of pressure there between the 50 and the 200 MA. However, it's a very, very shy uptrend. Everyone is probably waiting for a rebound in gold future price. Let's see what's going to happen. Not very encouraging as we speak. If the price will fall below the 200 MA, then we might see gold trading even lower once again. And now, ladies, gentlemen, traders, the mighty Bitcoin is trading at $56,980 and dropping after a few choppy trading sessions with mixed news. RSI stochastic pointing downwards, indicating potential sell-off on the market. Let's see what's going to happen, guys. Ethereum follows as we see on the charts, a bit steadier, a bit more steadier than Bitcoin. We can see the market trading more or less sideways on a 60-minute chart. There we go, yeah, with occasional swings, yeah, ups and downs, but overall, it's going sideways. It's probably waiting for some news on Ethereum or some news on Bitcoin, another rally on Bitcoin, okay, as this might give a direction for the entire crypto sphere. Now, quick look at some trading signals, guys. Half an hour into the US trading session, we see the euro with a strong sell indication on a 5 minutes and in a daily chart. We see the pound with 4 strong sell indications, guys, 4 red. We see the euro GBP strong buy. Obviously, if the pound is dropping, you will expect the euro to strengthen a bit. USD Cad strong buy on 3 out of the 4 timeframes, with the daily remaining a strong sell, and GBP JPY strong sell on 3 out of the 4 timeframes. This is it. A lot of mixed indication. USD Cad again, if I mentioned it or not, strong buy, and the euro GBP strong buy. Right, quick look at commodities, guys. Let's see what's happening this afternoon. It's only Monday, so it's okay if the markets don't react as we want them to today. We're going to have 2 very important days ahead of us. Tuesday and Wednesday, Jerome Powell and Janet Yellen will testify, so a lot of movement is expected. The markets today indicate a strong buy on a 5-minute chart on gold and silver. We see copper very undecided after the U.S. markets open, with the daily and hourly indicating a strong buy. And the only one that gives us a very good indication is the U.S. wheat, guys, which is indicating 4 strong sell signals. There we go. Yeah, this is the U.S. wheat, 4 strong sell signals from investing.com. Natural gas strong buy on 3 out of 4. Right, this is it. Let's have a quick look at stocks, guys, and see what's worth buying on Wall Street today or what's worth selling. Maybe we get more signals. Procter & Gamble, guys, with 4 green this afternoon. Very good stock to have a look at. We're looking at Johnson & Johnson with 3 strong sell indications, General Electric 3 strong sell, and JP Morgan as well, indicating a 3 strong sell on 3 out of the 4 timeframes. Who's doing well today? Intel and Cisco, guys, indicate 4 strong buy on all 4 timeframes for Intel, 4 strong buy on all 4 timeframes for Cisco as well. And a lot of red on the chart. Citigroup, Bank of America, and Goldman Sachs, guys, seem to be selling off today big time. But once again, it's only Monday, guys. Don't go anywhere. Join us again tomorrow, same time, same place, for a new round of market talks and my guest for tomorrow. Until then, remember to trade responsibly and may all your trades be in the money.